How do I make it so? Okay, there we go. There we go. Okay, people can hear us.
Okay. Okay.
I think we're good.
Okay.
So
I'm backwards in the camera though. I don't like this at all.
I don't like
It's
it
just very
either.
strange.
I'm also
It
backwards.
feels very weird. I think there's a way to flip it.
Is there?
I don't know. I'm exploring. Anyways, welcome to the stream, motherfuckers.
So
Dude, one of these days we'll get. Okay, so we started off just having incredible difficulties every time, which genuinely were because we started doing these on Twitter Spaces, which, as everybody knows, nothing ever breaks on those
no.
ever. No, the Twitter Spaces is just always completely broken. And then we started doing like the live stream format, like the video format. And it took a while before we got to like a complete stream with no technical issues.
A
Next
long
stage,
while.
it did actually. But I think the next stage is if we can get like I think we've had like two, we might have even had three in a row. I'm trying to think, but I know we haven't had four. Like I know for a fact we've not gone a full month without like without like something breaking.
We have though. We've gone several months without things breaking, and it's been great. But these last two streams, well, first of all, for the last one, we weren't streaming to X because Nikita added a new secret button that you have to hit to make the stream actually function. And then today, the thing that has been working for the last like 4 months extremely reliably and great, and I never thought it would break, broke. So this is where we're at. This is the current state of software. We should just eliminate all software from the face of the earth, delete it, kill it, murder it. I don't want to see it anymore. Stomp it, kill it with hammers. Software is the worst thing humanity's ever invented. That's my
What
hot
if, what
take.
if what if we just had the AI fix all of it? Then we could instead of having software, we could have slopware.
You're actually so right. Why don't we just hook up ChatGPT to all software and just like have it create more slop?
I can see no problems with this. Also, while we're at it, we should have it like start making paper clips. That'll end well.
Paper clips.
Wait, you haven't heard about this?
Is this some niche
It's
reference?
like a not really. It's like this thought experiment or story, whatever. It's like if you tell an AI like an AGI like, hey, your job is to make paper clips that but like without enough restrictions, eventually it'll just turn like all the molecules on the planet and eventually the universe into paper clips, which is less useful than what it sounds like it would be when you just tell the AI, hey, you're in charge of making paper clips because now everybody's dead. Um, but then we wouldn't have to deal with broken software. So, there are upsides, I suppose.
That is actually a pretty good upside. I would be down.
Yeah,
Can we
yeah.
do that today?
I don't know. Let me get let me get soul cranking on this. Let me ask it.
Soul, okay. I'm not gonna lie. I mean I'm totally taking this stream off subject, but I tried Kimi, which is Moonshot's AI, which is the big scary Chinese model that's apparently as good as both Claude Opus and ChatGPT 5.6 Soul. It's very good. Like
And it's way cheaper.
it's like 1/3 of the price of 5.6 Soul,
Yeah,
which 5.6 Soul was already like half the price of Opus. So it's so cheap and it's
yeah.
amazing. And these big AI companies kind of have it coming for them because these Chinese labs are building really, really good models. And you can say all you want about how like, oh, these Chinese labs just distilled like ChatGPT and Opus, but what do ChatGPT and Claude have to say about all of the humanity's information that they distilled to make these models and stole illegally, right? Like it's double
Yeah, I mean,
standards.
that is the funny thing is like because you see Anthropic like arguing for like hey we have to stop them from stealing our IPs. Essentially, their argument they're like U.S. government needs to do something. You're like, hold up a second.
Didn't you guys
Pot,
steal
pot,
all
pot
of
calling kettle
humanity's
what now?
information?
Yeah, pot calls kettle what now? Like I don't,
I
I don't know.
I have a lot of thoughts on the ethics and marketing strategy of Anthropic, but I won't get into that on the stream. What we are getting
That could be a whole
into,
nother stream. Yeah.
it could be because I have a lot of shit to talk. So much shit to talk. I used to
I
be
need to
like,
intro I didn't need to introduce you to Roy, but that's a different thing.
yes.
Anyways, what were we supposed to be talking about today? I don't even.
Well, I hope you knew. So
Oh. Oh, well, that seems like a problem. I think, okay, so
I'm
normally,
fucking with
obviously,
you.
obviously, always this is, I think, going to be our first Solana circuit where we don't actually have a guest due to a series of unfortunate events. Uh, Mostly, I don't know. Anyways, so Nate and I were chatting yesterday, like, oh, what do we do? So we brainstormed some options, and apparently, uh, we kind of figured maybe you guys wanted to, we talk a lot about, okay, like what we're building at Raiku and why this is going to be like important for traders and institutional money operators and capital flows and things like that. Um, and we had the thought that maybe like it's hard to understand why that is the case because a lot of people, unless they like operate on a trading desk or do this like professionally, like maybe don't understand like all the concerns or like all the different things that like people like these sort of capital allocators need to consider and like how they think about not just the market but how they interact sort of with the world as a business and as a system of thinking. So yeah, so we kind of figured maybe you guys want to hear about that. I know at least three things about this topic, and one of them is how to count. So yeah, we're kind of just spitballing it here today. If you guys have questions, drop them in chat. But I think Nate's just kind of going to ask some questions and then I'm going to pretend like I have answers. So,
And I'm gonna pretend like I have questions. It's gonna be great. So, David, I think starting out, people know you as David, the socials and content lead for Raiku. But who is David? Because you're a very deep, complex man. You run these quant trading boot camps. You you take everything I say in some sort of innuendo way. You there's a lot to David that the community does not know of, and you have a very extensive trading history of like experience in working in these different quant firms and whatnot. Like you are technically a quant, no?
yeah, so quant is just it just means quantitative trader, which just means somebody who instead of like okay, I think pretty much everybody who's likely to be listening to this, if you've ever done any trading, like it's probably like hey, I think this thing is going to go up, and so I'm going to buy it. And maybe if you get a little fancier with it, I think this thing is going to go down, so I sell or short it, right? And you're kind of just making a directional bet. Whereas quantitative trading like you're still placing trades, but instead of like taking a bet, like I have a reason to think that this thing's going to go up because maybe it's the funniest meme for this week or whatever. It's more like okay, I've built this sort of mathematical model of that sort of think about it like this. If Nate, if I were to offer to you like, hey, I want to flip a coin, right? And if it's heads, you're gonna pay me $1. And if it's tails, I'm gonna pay you $1, right? That's an even coin flip game, right? But mathematically, like if we only play it once, one of us is gonna win $1 and one of us is gonna lose $1. But if we play the game a million times or 10 million times or 100 million times, on average, neither of us is gonna make or lose money, right? But so then you kind of take that model and you go, okay, that's a very simple mathematical model on something that's based on probability, right? Where we expect it to be 50-50 and there's no edge. Like nobody's expected on average to win or lose money. Quantitative trading is sort of taking that model and finding places where it's like, oh, but if I know this coin is weighted or loaded or something, and it has a 1% higher chance of landing on heads than tails, and we might be wagering even odds, but if I flip this a million times, on average, if it's weighted in my favor, I'm going to make money, right? And I don't have to care about the outcome of like one particular coin flip. It's only 1%. You would probably never even notice that there's an advantage, right? Because it's small, but it's statistical. It's mathematical. And so the goal of quantitative trading is to kind of find different ways to trade where it's like, okay, I want to find a repeatable thing that I can do, that I've built a mathematical model where I expect to make money on average if I do this thing, right? And so a lot of this kind of trading relies on, because these edges are really small, these are going to be like higher frequency type things. So the less often you get to trade, the bigger your advantage needs to be, right? The bigger your chance of winning needs to be, or the bigger the payout of the win needs to be. because otherwise you just kind of, there's a chance that, maybe maybe I only have $20. And if we're flipping a million times, even if I have the advantage, if we're betting a dollar every time, there's probably at some point going to be a streak of 20 losses for me, right? Even though I have an advantage, right? So you have to be able to survive that. So the sort of you kind of have to be able to size your advantage and make sure you're able to continue playing and things like that. But anyways, I'm getting sidetracked. Quantitative trading is a style of trading where you build a mathematical expectation and model that determines how you make decisions and how you trade. And sometimes that's automated, sometimes it's not. Usually, more often than not, there's at least some degree of automation involved. But that's kind of just what quantitative trading is. But it's also how like trading businesses or banks or businesses that may rely in some part on trading. This is how they think about things, right? And even when you're not taking like these sort of like high frequency mathematical trading edge type things, they still have to be able to create those models from a business perspective, even at, and then all the way down to the trading and strategy perspective. So.
Okay. So quantitative trading is basically just doing a bunch of different mathematical calculations to figure out what trades will give me an edge over an extended period of time if I do this trade over and over and over again.
Yeah, that's exactly right.
Okay, interesting. So I'm going to go all the way to the left curve here. What would you say to someone that wants to start day trading?
Okay, I hate the term day trading, and maybe I'm dating myself a little bit, but just because like when I was first like trying to figure out markets and stuff, I didn't start off as a quantitative trader. I didn't get like any kind of formal experience. Literally, this is all just me banging my head into a wall and just spam DMing like people I know are smarter than me on Twitter until like some of them started responding and I got to learn from them. But when I was first starting to learn trading, like there was I don't know if anybody else is gonna like know what I mean, but like this would have been back in like I don't know like early 2010s, right? Like 2010 to like 2015. It was just like Instagram was just stuffed full of like buy my day trading forex course, right? And it's like some guy that's got some bullshit chart pattern or something like that. So day trading I hate that word. My honest recommendation to somebody who wants to get into trading or trading actively is don't. And it's for two reasons. One, because if you're the person who's actually going to do well at it, you're going to completely ignore that advice anyways. And two, because to do it well and in a way that's like sustainable and actually going to like be beneficial to your life, it is a full-time job. And it's actually more than full-time. You will put in way more time, effort, sweat, blood, and tears um, than you will at most jobs. But if you're going to compete in markets, it means like you're competing against some of the best and brightest people in the world, right? Like they do have more resources than you. Odds are they're smarter than you, right? And they probably have a lot more money and a lot more experience. That's just the fact of the matter. It's like, so if you think about it from that perspective, it's like, okay, if I'm going to participate in the markets with these people, what do I have that gives me an edge? Like why would I expect to be able to take money from these people, right? Because anywhere you make money in the market, it has to come out of somebody else's pocket, right? Like markets are zero sum. There's a whole argument for inflation and blah blah blah, but effectively zero sum. So if you're gonna play that game, it's like you got to take it seriously. So I recommend most people like I don't actually actively trade anymore because I work at Raiku, and my job is not trading, right? I invest. I may have opinions on markets, and I know how to trade, but despite being good at it, which I am, uh, it's not my job. It's not my full time job, and so I'm saying like I don't feel like if I were to try to do this, a couple hours a week or in the afternoon or after work or something like that, like I don't feel like that's a wise call. Um, so yeah, so that's my advice. Don't do it. That said, if you were in the former group that's like going to ignore that advice, um, just start clicking buttons with small amounts of money. Figure out what doesn't make money until you figure out all the ways you can lose money and then the only things that are left are kind of ways to at least break even or start making it. This is probably not good advice, but it's kind of the route that I had to take. So
Yeah, I mean it is good advice, right? Like there was a time in it was 2021 and I had made a decent amount of money from trading NFTs. But back in that time, it wasn't trading. It was just being at the right place in the right time and clicking the right buttons. And then you would make like 5 grand just by hanging out in the Discord server. And I convinced myself that it was trading and I was a good trader. And I think a lot of people did this during that time. And I think a lot of people still kind of have that mindset that they are good traders. It's just the market that's tough to trade in. That's why they're losing so much money, which is not the truth. Like the truth is that that was a very frothy time. There was money flying out of everyone's ass left and right, and everybody and anybody was making money. And I still feel like we're unwinding from that time and teaching people the valuable lesson that no, you are not a good trader. You were just lucky, which a lot of people were. And I was so deluded. I quit my job as a valet and I was like, oh, I'll just do this crypto thing full time. Thankfully, that didn't last a super long time because I did find another job before like I traded all my money away. But But yeah, valuable lesson to learn, man. Like trying to convince yourself like, "Oh, I got lucky on one trade. That means I could do this full time." Like I think a lot of people say, "I made $500 in one day one time," and I think I can if I repeat that every single day, then I'm going to be a millionaire by the end of the year. And that's kind of like the psyop, you know? So, you're muted, David.
as our normal, we're using Google Meets today because our normal like video provider decided it hated us for some reason.
It's cooked.
Hence, yeah, hence why we were late to start the stream. I don't know why, but like when I mute on here, it mutes on Google too sometimes. I completely forgot what I was going to say. I'm not going to lie. But anyways, yeah. I think like the point is like the way first of all that like a lot of people think about trading is kind of like what you're saying, where it's like, okay, I did it once, therefore I should be able to do it again. It's like, no, it's actually a probability game, right? Where it's like you kind of have to have this mathematical model where it's like I can like this is a hard lesson to learn as a trader. I might lose money for a week straight and place hundreds or even thousands of trades a day during that time period. And I might be down money every day for a week. I might be down on net for the month or even for several months in a row, depending on my strategies and stuff like that. It's just it's being able to like say like, no, I know I'm making good decisions and eventually they're gonna pay off, right? Sorry, I have to blow my nose. I'm like hearing my nose like whistling in my own microphone. That's disgusting.
You're good. But I did see your question, Chidera, and we will get to that question in a minute. Um, but imagine that most of us have limited capital and time, and we would all like to learn how to trade. I actually had a bit of a stint where I tried forex trading, which if any of you don't know what that is, that's where you trade currencies, and like the spreads are very tiny on currencies, and you make like a little bit of money at a time. And I was shit at it. I lost so much money, but it was
For
fun.
those of you who don't know what forex trading is, it's the worst market in the world you could possibly trade as a retail trader. Like, just don't fucking do it.
Really?
Yeah, because you're not actually trading forex. You're trading a CFD, which is a contract for, or it's like contract for difference. It functions kind of similarly to a perpetual futures future, but usually in 99% of the cases, you're actually just trading against the exchange itself or like whoever you're like whatever platform you're trading on. And so if you're making a good trade, then they'll end up like forwarding that to the market. But basically, you just get wrecked. Like um, yeah. There's all sorts of reasons not to trade forex, but
That explains why I got wrecked.
it's also like the first thing I ever tried to trade. So, but to kind of bring this back, like I did want to talk a little bit about like kind of given that framing and that understanding now. Like the goal of the stream isn't to like teach you like, hey, here's what you do in order to trade, because like we were saying, it's like I don't think it's something most people should be doing, and it's not because you can't necessarily. It's just like it takes that kind of time, effort, and dedication, which most people realistically just don't have. I don't have that, right? Which is why I'm not doing. But for the businesses and like sort of the professionals that do this regularly, you can kind of see how like the considerations change, right? Where it's like, okay, if instead of going like, hey, I'm making a bet on like, I think this thing is going like a better thing than this other thing. Like I think Solana is better than Ethereum, which is a trade that I place, but it was more of an investment thesis, right? Like these are things you can do, but for the people who are operating on these more sort of mathematical models, you can imagine now like thinking from that frame, okay, if I'm building a mathematical model, what is it based on, right? I have some set of actions that I'm going to take. I can say like, okay, I have math that says if I place this type of trade, then I expect it to be profitable. Okay, well, what assumptions does that rely on, right? That's kind of like the question a lot of people don't get down to. It's like, okay, who says I get to be the one to actually place that trade? Because if it's a good trade and I have a mathematical reason and I can derive this just mathematically, there's other people doing math out there, bro. Like, again, some really smart people getting paid a whole lot of money, and that's their full-time job. So if I get to place the trade, why? I'm more likely to be wrong, right? Okay, but what if I'm the fastest one? What if I'm the first one to the opportunity? Now there's a much higher expectation. It's like, okay, I have a reason, I have a story, I have an explanation for why I get to be the one to take this trade that I think is good, right? That's just one consideration. So you start thinking about things like, okay, I'm building a mathematical model, but I'm going to get like, we call it adverse selection. You're going to get adversely selected against, which is like conditional on your ability to actually do the thing. The value of doing the thing is less likely to be good, right? Kind of like how if you're trying to date people, you're going to date single people, like, unless you're a piece of shit. But you're trying to date people that are single. Okay, well, why are they single? Because nobody's wanted to date them yet. Yeah, you know what I mean? So it's like you kind of think about like so there's all sorts of these like baked in assumptions. And so when we're building mathematical models, like as traders, you kind of have to really, really be careful about what assumptions you're making, and you really have to know exactly what they are and be able to rely on them. Like they can't just completely flip or 180, right? And now we get kind of down to Raiku and Solana, right? And what we're doing here. If one of the assumptions is I need to know that like I have this mathematical model that like I get this signal and I have some system that turns that signal into a decision to place a trade, but I don't know whether I'm going to be the first or the last person to do that trade. That can be the difference between whether I make or lose millions of dollars a year. You know what I mean? Like that's just like it's something a lot of people don't think about. But like when you're operating like this as a business, it is something you really, really have to consider. You go, okay, you're also considering things like, okay, what happens if my server crashes, right? Like you have to model that in. Okay, now I need a backup server. Okay, what's my ping time? What's my latency? Like there's all these sorts of different concerns because you have to make sure that the model you're operating on actually reflects as closely as possible the real world, and that you're able to maximize the advantages you're able to, you're able to squeeze out of the market. So, yeah, I think it's kind of like a whole world and a whole kind of way of thinking. That this is one of the things I like to talk about a lot in like the quant trading boot camp, and obviously, I'm not trying to show that or anything, but like, it is something like I like talking about clearly, and I think it's kind of a whole different way of thinking that maybe a lot of people aren't super familiar with, because I think a lot of people are like, oh, you're a trader, so you're just betting on what's going to go up and down, right? Where it's like, yeah, like sorta, kinda, but no, not really. Like, I don't care. I just want to place as many trades as possible that I like expect on average will be good. I don't actually care whether I'm right or wrong on any given one. So
Yeah. And on your point about like making sure that latency and speed is all correct, like based on the model you're working off of, we've talked about this a couple of times on stream before, but these trading firms literally spend billions and billions of dollars just to get like milliseconds of edge on these trades. And
way less milliseconds. Like they're measuring in nano and microseconds. So I told you about a tweet that like I might have like want to reference. It's from Brett Harrison, who is he's the ex I think like head of or CEO of the FTX US division. He left that like before the meltdown and everything like that. He's quite well respected by people I highly respect in like traditional finance as well as in crypto. Crypto's kind of like squinting their eyebrows at him because he was involved in FTX, but the dude is legit and knows what he's talking about. So yeah, I don't know if you're able to bring that up, but he talks about how like when you're talking about specifically like high frequency traders, right? And because you do the thing, the more often you can place bets, the less variance you have to worry about, right? Where it's like there's just less randomness that might end up taking you out. But these guys at the top level, the kind of optimization they're doing, they're like, okay, it takes too long for for the information to come in on the wire and then get sent through the bus into into the CPU, into the cache, and back out. So what do? Okay, we're going to start doing like inline processing and packet filtering, right? So that we don't have to wait for CPU cycles, which CPU cycle, what is it, like a couple million times a second? Like, yeah, let's shave off a few of those. You know what I mean? Like that's kind of the level of like the detail that can go into this kind of stuff at the top level, where it's like those little tiny things matter, and the difference between assuming something that could even just be slightly off, again, can literally be the difference of millions or even billions of dollars profit. And you talked about like, and we've mentioned this before, I think with Austin Federa, shout out. When we had him on from Double Zero, like we were talking about upgrades to, like the internet globally, and how much money, like billions and billions of dollars, have been spent to shave off. Hey, there was a whole project like, hey, let's literally build a completely straight line so that we can run fiber, because if you curve it or whatever, then there's issues with that you lose some packets and it takes longer for the light to get there, and then like within a couple of years, another few $billion were spent to run the exact same line, except that using microwave towers, like short range microwave tower communications, because it just shaved off just so. Yeah, like when we're talking about like, okay, if it's worth billions of dollars of spend to get these little advantages, you start to see how even the tiniest assumption or the tiniest like thing that could go wrong or makes a difference in the model is just incredibly massive. And so like I know like the goal of Solana and everything, like what we're working on is bringing it's internet capital markets, NASDAQ on chain. We want global finance on chain, and that's beautiful and that's wonderful. But right now, the sort of guarantees and the sort of it's not so much that the infrastructure is unreliable. Like you can get a transaction through, but can you guarantee that it gets through when you want it to, right? And it's like for basically all of us, like listening on this stream or whatever, and you and I talking, I don't really care if I'm the first person in the block or the 900th person in the block. You know what I mean? Like it doesn't matter, because again, like I'm not doing this thing. But for we start talking about traditional finance and institutional levels of capital, they care a whole fuck of a lot, right? Because they're building entire businesses on knowing exactly, like just removing as much as possible from sort of the variables or the things that can change or mess up with their model. Because again, if we want the big boy money, we gotta do the big boy details. You know what I mean? So
Yeah, 100%. And it just makes the odds even more stacked against retail traders, because I mean, obviously, retail traders aren't spending hundreds of millions of dollars to make sure that their fiber is as fast as possible to their internet. Most people are using home internet, cellular service. Like it's pretty difficult to keep up with these trading firms. But all of that to say, like, there are successful retail traders. There
I
absolutely.
don't think it's necessarily stacked against retail in that sense, though. Yeah, there definitely are. I don't think it's necessarily stacked against retail. And again, the whole goal of this isn't to be like, this is how you trade and make money, because first of all, our legal department would probably take me out back and shoot me in the head.
They would.
And yeah, I know. And also, we don't have 3 weeks. But like, but there is an element of like, okay, yes, we want to bring institutional capital on chain. We've talked about this with some of our guests, and about how like we can start doing like credit markets. We can start doing these like serious markets. Realistically, Citadel's probably not trading this week's cat coin though. You know, like they're just not. So it's like, so there's an element of like, if you want to get started and you want to learn markets, go find somewhere really small. Don't risk a ton of money. Like try, like you're going to, if you're learning how to trade, you're going to lose. You're going to lose your money. Actually, the worst thing that can happen for you if you're trying to learn how to trade is that you get lucky one or more times starting out. Like that's actually the worst thing that can happen to you, because then you think you know more than you do. But like if you want to learn, like go play in the small markets, and that's where you'll be able to have an advantage, because you're not playing against the big boys. It's like, okay, I'm playing in a market that has a $30 million market cap and $12,000 of daily volume. By nature of that being true, there's probably not a whole like quant trading desk sitting on the other side of my trades. You know what I mean? Like, because why would they be? And so those are the places you want to practice in, and you want to like learn stuff. But again, like the whole goal for what we're trying to build here, like on Solana and here at Raiku, is sort of like global finance on chain at scale, right? And so that means like it's not getting rid of retail access, like access to trading for retail, because I think that's a great thing. Like crypto is genuinely the best market in the world to learn, like about markets from. It really is. And that's like that's great. But at the same time, we don't want it to just be cat coins or meme coins or whatever else, or as fun as it was, the food farming season on DeFi summer on Ethereum. You know what I mean? Like those things are all fun, but like if we're going to be a sustainable industry, if we're actually going to be infrastructure for finance, we got to be able to handle the really boring stuff, which happens to be the multi-trillion-dollar markets, right?
Yep.
It's like, okay, we're gonna have yes, let's make sure settlement and finality and all the legal structures are in there for debt tranches. You know what I mean? Let's put credit ratings on chain and be able to verify this. You know what I mean? It's like it's all the boring stuff where it's like, even talking about it, and I know what this stuff is, my eyes are glazing over, right? Like it's not like we can have both, but I think we for a long time, like the sort of structure of crypto has been very retail focused, and I think that's definitely changing. And we're seeing institutional capital eyes like being pointed on chain, and that's Solana specifically. Yeah.
I think the days of the 10 million% APYs are unfortunately over, boys. I think like yes, crypto is becoming more mature, and with that, the opportunities they don't become more sparse, but they become more I guess populated quicker, which doesn't allow for those like million% APRs, because everyone's just going to jump in at once. Like everyone knows with AI being a thing, like everyone's making trading bots, everyone's making blockchain scanners. Like these opportunities, if there is opportunity, for the most part, is being taken advantage as soon as it appears on chain. Like especially on Solana, where on-chain data is getting better and better. Like the actual edge that an on-chain degen that just clicks a bunch of buttons, it appears to be decreasing over like day over day, and we've seen this especially with airdrops. Like airdrops getting diluted, airdrop value decreasing over time. Like it's very rare to find a Uniswap level airdrop in today's landscape, because everyone knows the rules to the game. Everybody knows that you interact with the protocols, you participate, you do whatever, you get the airdrop, right? So if everyone knows the rules of the game, then the opportunity kind of disappears, because everyone can just repeat it over and over and over. And the same goes for trading.
Yeah, I mean, this goes back to like what we were saying, or what I was saying earlier, where it's like conditional on you getting to be the one to do the thing.
Yep.
Is it actually good anymore? You know what I mean? And this is not to say that like you should just never place trades or never do anything, or in my example, never go on a date, right? Like it doesn't mean it's just always bad, but it is something to consider. Where it's like, okay, why do like I need to have a story and be able to say like, okay, why am I the one that gets to do this? Is it because like I have some kind of advantage? Do I know more than everybody else? Am I faster than everybody else? Do I just have a sort of like a better mathematical model? You know, in the dating market, it's like, do I get to date this person because I live in a town with 45 people and all the rest of them are 97 years old? You know what I mean? But have a story for why you get to be the one to to do this thing. And yeah, like again, the more available information is, the more you kind of have to assume, yeah, there's probably going to be a lot more people like looking at it, and a lot of them are going to be smarter than you, and a lot of them are going to be dumber than you. Ideally, you just go find a place where there's more of the latter than the former. So
Yeah, I think with more and more sophisticated traders entering on chain, the amount of stupid traders has decreased significantly, and the competition has just increased, and that's why we're seeing less and less money being made by the Degens. But Lupu actually had a good question. One sec, I gotta find it. There's so many messages.
also shout out Lubu. Like honestly, been around for forever in the community, and just always on the streams, always in the chat. Love to see it.
Lupu's a Chad, absolute
Absolutely.
Chad. Speaking of
I
which,
popped.
sorry, go ahead.
I was gonna say I popped in on like one of the game streams. It was like something to do with beans and running across like an obstacle course, and just like hung out with the community for a sec. It was kind of fun. I didn't get to
Nice.
play because I was in between meetings, but
Yeah, this is one of the most active crypto communities out there, 100%. I truly believe that. It's because of our mega based mod team. So shout out to you guys.
this is true. But it's also because of our incredible Mr. Beast. So shout out to the man, the myth, the legend himself.
I just wish I had Mr. Beast's money.
Don't we all?
So
Don't we all?
sad. Looking the part is one thing, but having infinite money and resources, that's another thing.
Those are different things. Yeah. Yep. Those are definitely distinctly different things.
Yeah, I would say those are two things that they're different in some ways. Yeah, I would completely agree with that. But Lubu's question was, where do you even start with making these mathematical models? Like from someone who's starting from zero, say, they want to get into quantitative trading or just trading in general, like start with a one asset, where would they start on making these mathematical models? And I assume they can do a lot of it with AI nowadays.
Oh yeah, for sure. I think a lot of it is figuring out what the right question to ask is. Right. And the best way to do that is just to ask as many questions as possible and work through the answers. So and what I mean by that is so actually literally the first thing I ever did when I was looking at like starting to think this way about trading was just, okay, if the price of a thing is above the 200-day moving average, like if the candle closes above the 200-day moving average and I buy it then, and then I hold it for I ran the numbers on it. If I hold it for a day, if I hold it for a week, if I hold it for a month, if I hold it until it crosses back below again, does this make money? Right? And that's a question. Like that's not a trading strategy. That's a question. I'm like, okay, here's an objective thing that I can just measure that's consistent, right? I can always measure where's that 200-day moving average that's measured on a candlestick chart. And if I create a rule set based on this data input, like this data feed, can I find a rule set that makes money on average, right? And so that's like the simplest kind of thing you could do, right? And from there, you go like, okay, no, it doesn't. Oh, okay, like this doesn't seem to work, but maybe if I hold it for like 4 weeks, or like maybe I hold it for exactly 22 and a half days, but then you go like, okay, wait, but 22 and a half days, is there a reason for that? No, there's not. Okay, so it's probably just like some statistical noise. You know what I mean? So you kind of have to filter the answer to these things as well. We call that overfitting, where it's like, oh, if you do the like, you just have 28 different parameters that don't actually like make sense together, but you found the one edge case where it just happened to line up. You know what I mean? So you kind of have to be careful.
Coding.
Honestly, yeah. But yeah, you kind of start with like a very basic thing like this, and I will okay. I'm sure there's people who are like, okay, but when are you going to spill the alpha, bro? I'll give you something that does genuinely, again, this is not financial advice. This is not a recommendation to trade. This is not any of that.
I'm calling Charlie.
Something that typically works in many markets, not just crypto, but something that tends to work okay, and have a positive expectancy. Very high variance is something that is making a new high, right? So if something has not, let's take like the last 10 active trading days, right? If the price of the thing closes the day or ends the day higher than at a higher price than it's been, at any point in time in the last 10 days, and you buy the thing, on average, over time in a lot of markets, over some duration, that tends to make money, right? This is, again, not a recommendation. I'm not telling you to go do this. There are way better strategies out there, but it is like one of those things where it's a very simplistic mathematical model where it's like, okay, take 10 days, look at where it is, condition, what happens if I do this, right? And what you'll find is like, okay, sometimes you're going to lose a ton of money, sometimes you're going to make a ton of money, and sometimes you're going to make a little bit, sometimes you're going to lose a little bit. So what's the mathematical expectancy of, if I built a trading system based on these rules? Like what do I expect to make on average? And then how do I make sure I don't go broke by like betting too much at a time and, just getting unlucky, because you will get unlucky. You're going to get those unlucky streaks. So how do I make sure that I stay alive long enough to actually see that mathematical advantage play out? Is kind of how you have to think about it. And that's, again, not trading advice. This is not, I'm not saying go do that, but these are the kind of things you would like start to kind of look at, right? And then you can get as infinitely as complex as you want to. Jim Simons back in the 80s kind of invented like the whole idea of statistical arbitrage, which is like, hey, I have this basket of 95 different things, and what's their expected relationship to each other over the course of like the next like 6 hours or something like that. And so yeah, you can make this as complex as you want, but it boils down to, I've done the math, and when these certain conditions are met, I know if I do this thing, I should expect on average to make money. And I have a reason for like a story I can tell for why I get to be the guy that does this, where, my competition doesn't. So.
Interesting. Okay. Well, thank you for giving us the alpha. That's what we wanted the entire time. So thank you for that. Trying to think what other questions I could potentially have about trading. I asked about retail, I asked about day trading. Are there any other questions from the chat? I know there was a question about, if you have low capital and time, what's the most risk-free way to get into trading? But I feel like we kind of already covered that. Just like get started, go to like low volume markets and throw your hat in the ring.
I have to be pedantic. There is no risk free, right?
Yeah.
Like you might not have a lot of capital, but but the whole reason you can make money trading is because you're taking some level of risk. And that's why you build the mathematical models where it's like, okay, how much risk can I afford based on the variance that I expect, which that's a whole mathematical calculation in and of its own, right? And
Yeah.
you learn the relationship between like volatility and time and how those two end up kind of being the same thing. And you learn R squared and like Z scoring things and all kinds of stuff. But this is like kind of unrelated. I hated math so much, dude. Like in school,
Really?
hated it.
But you're
And
a
then like,
quant.
well, because then I found out it's me interested that I'm asking in English, and they just directly translate it into a math equation. And as soon as that clicked, I was like, oh, this is great. I fucking love this now. But like growing up, it was like, okay, if Johnny has 95 watermelons because he's a lunatic, and then Sally like throws 3 of them at her brother, like how many grapes does Jimmy have or something? You know what I mean? Where it's like, in school, you're like, oh, why do I care about any of this? But as soon as you start being able to as soon as you start actually being able to be like, okay, look at the chart. How much do I think it's going to wiggle in the next week? Like, what are the odds of this wiggling more than this amount? Because I don't know what's going to happen, but if it goes like too much this way, then I'm going to lose some money. What's the chance of that happening? Oh, now I'm looking at volatility, right? And now I'm doing math to be like, okay, what's the volatility? Like, how many standard deviations would I have to move over the course of the next 4 days? You know what I mean? Like these turn into math equations, but these are questions I'm looking at and having in English. And I'm like, oh, now this is fun. Now it's useful.
Okay, but like and that leads into my next question. You were talking about lines squiggling on a chart and it reminded me of something I wanted to ask you. Is technical analysis just astrology for men?
Kinda. I'm not gonna lie. It's really funny because I actually just had this conversation the other day in a group chat where it's like one thing that like there is an actual statistical quantifiable relationship between moon phases and the market. Literally pick any market. I hate that is true because it's
Really?
fucking ridiculous. Yeah, but it just is, man. I don't know if that's because just enough people believe in it and so they trade that way and then it becomes self-fulfilling prophecy. I don't know why. Again, I hate that is factual, but it is factual and it pisses me off to no end.
That is wild. What the fuck?
So yeah, basically we're all a bunch of dumb monkeys on a rock, dude. I don't know. Like, what are we doing? I certainly don't know.
We are 100% dumb monkeys in a rock, and we've just, yeah, I don't know. We made rocks valuable, and we decided, hey, let's speculate
We
on these shiny
we taught
rocks.
sand to think, dude. Like, what are we even doing here, bro?
What is wrong with us? Like we could have lived a simple life of picking berries and like foraging in the forest and living in caves, which by the way, I went to Missouri and I did my first like cavern exploration. Caves are great. Like they're like 30 degrees cooler. They're dark, they're quiet. They got free water in there. Like I would live in a cave. 100%.
Honestly, yeah, yeah. I don't know though. Can you get DoorDash in a cave?
Ooh.
That would be the
I
hard
don't
part,
know.
right?
I don't think so.
Ah, that'd be tough.
Unless
It'd
like
be tough to get your
a gazelle like wanders into your cave and then that's kind of like it's like caveman DoorDash, right?
Yeah, yeah, yeah. I don't know. We should build
I
this.
couldn't live
Who's
without
building
Taco
it?
Bell.
Who's building this? Who's building DoorDash to caves?
For real, I'm down. If they build DoorDash for caves, I will move into a cave tomorrow. 100%. They're
Hell yeah.
lit. They're lit.
Actually, they're
Um
kind of not. They're pretty dark, but you know.
they okay. All right.
Listen, you did walk straight into that one. Come on.
You're off the stream. You're done.
All right. You
It's
can kick me
over.
off. It's fine. It's fine.
Um but David, I really appreciate you coming here as always and giving us the laydown on quantitative trading, regular trading, and what retail traders are up against. I have one more question for you. Why is deterministic execution so important for traders? And why does it matter so much that traders' transactions happen at the time that they're supposed to happen?
Yeah.
Guaranteed.
I mean, it goes back to the like the modeling thing, where right? If I know that I have this advantage, and I know that basically, like mathematically, right? Like if I'm taking a trade that is on average supposed to make money, and I also know that like the trades that are most likely to be the ones that are on the profitable side of that equation, because some of them, like a lot of them, are going to be on the unprofitable side. Again, we're talking about I make money on average, right? But you're much more likely to be the first one or the one position to take a bad trade than you are to take a good trade, right? And so if the good trades are far more competitive, then you need to be able to count on being able to get there. Right? Because otherwise it doesn't matter how good your model is. Like if I can't know, like if I can know, because again, there's no competition for the bad trades. So you know for a fact you're gonna get all the bad trades. That's just gonna happen, right?
Right.
But if you can't count on getting the good ones, again, that'd be like again going back to the beginning of the stream. If we're playing the coin flip game, but I'm like, hey, I'm going to just every time it's gonna come up, like in your favor where I have to pay you $1, I'm just like not gonna play the game. I'm only gonna play when I win. you're fucked. Right? So you need the deterministic execution of like, no, if we're playing this game, I need to know that I get the good side as well. Otherwise, the whole business model's dead, right? Otherwise, you're just completely screwed. Like it is literally life or death. Like from a business perspective, like I don't think people are going to show up and like shoot you at your house or anything. But
You heard it here, folks. Use Raiku or you're gonna die.
no, I don't. God damn it! I have to go talk to Charlie. Don't I?
It has been certified by the team. If you don't use Raiku, there is a non-zero chance that you could die.
There's actually a 100% chance you will die. I will say that.
There's a
But this also applies to people who don't use Raiku because that's how humans work. I don't know. And on that super cheerful note, time. So later, guys. No.
if you use Raiku or don't use Raiku, there is a basically 100% chance that you are going to die. So in both scenarios, we can claim that if you don't use Raiku, you're going to die. But just leaving out the fact that if you do use Raiku, you're also going to die.
This is the best marketing. Yeah, somebody clip that because obviously this is our sales pitch for sure.
This is our new sales pitch. We're gonna run with it. This is our narrative for the month.
Yep. Yeah.
We're gonna go hard on it.
Tell your people, tell your friends.
tell your friends and family that they're going to die if they don't use Raiku. Thank you, everyone. All right, see you next week.
Yep. Yeah.
But we are at time, and I appreciate you all coming to the stream today. And David, thank you for sharing your wisdom and knowledge on trading with us. And we will see you all at the Raiku Town Hall on Friday, which David will not be there. However, we will be having our head of PR, Chris, which will be very exciting. He's a very cool guy, very British. He's a legend. And
Chris is awesome. I'm kind of jealous that I won't be there, but you guys are gonna have fun.
Sucks to suck, man. Maybe don't take time off work, you slacker.
Listen, I'm sorry it's my birthday, okay? My bad.
How dare you have a birthday? How dare you?
I know, right?
Disgusting.
I gotta stop that. It's okay. I got a year to figure it out. It's fine.
All right, guys.
But yeah, thanks, guys.
Thanks for coming. Peace.